Welcome back to the weekly Brooklyn Market Update, brought to you by Engel & Volkers, Brownstone, Brooklyn. My name is Katriona Kearney, and I'm joined again today by Donald Brennan. Donald, you look a little different this week.
Yeah, got a little sun. Actually, out with my family on the kids' spring break, doing a little skiing in Park City, Utah. Be meeting with some of the E&V folks here in Park City on Thursday. See what they're up to. The market here is certainly a tremendous amount of demand for housing here. It's become a very popular destination for people in the United States and outside the U.S. obviously, and looking forward to hear what they have. And also part of this is that don't forget that you can always reach out to us. And if you're looking for real estate in other parts of the country, we have a very, very expansive network of trusted, capable, experienced agents that we can introduce you to, and they'll be happy to work with you, explore options in the different markets in the U.S.
So let's get back to the weekly market data across the 16 key neighborhoods that we track. We're going to start by comparing trailing 4-week average trends for the above 2.25 million market, which we call the luxury market, and the properties priced below 2.25 million. So are we actually beginning to see a slightly different pattern emerging in the new to market versus the in contract sales for these two different price points, Donald?
The luxury segment is a different circumstance right now for sure that has evolved over the last month or so. In contract deals were running ahead of new to market listings from about mid-November through late January. And then in early February, in contract deals started to pick up, new to market listings started to pick up. In contract deals kind of stayed the same. Last week there were 12 in contract deals, which is a relatively low number to past prior weeks, and 20 new to market listings. So more product coming on the market there. And again, as we talked about before, that introduction is at the 2.25 line and just above, under like 3.5 million, 4 million. The bulk of the activity in the luxury market is in that segment. And as a reminder for people, our methodology is that our luxury segment is the top 10 to 15% of listings on the market in any given week relative to the total number of listings in the 16 markets that we track. And then below the 2.25 number, last week we had 75 new to market listings and 71 going into contract. And so that relationship is still kind of staying the same, where the in contract deals are outpacing the new to market listings, even though the new to market listings have increased dramatically in that segment of the market. And it's really kind of healthy across the board there, from something as low as $500,000 up to the 2.25 number, million to $1.5 million, seeing the most activity for the last 6 months or so.
So let's talk about condominiums, because from what I saw when I was looking at the data, it looks like there were an awful lot of resale condo in contract deals this past week for those properties below 2.25 million.
Yeah, it was a big week for resales, and they seem to be coming mostly out of Williamsburg. We haven't seen 14 resales occurring or going into contract in almost 12 months now, I guess, since the beginning of this pandemic. And so that's great to see. There's lots of different storylines within that 45 number of where those people are coming from and or where those sellers may be going. But it's really good to see that kind of healthy absorption in Williamsburg for sure, which was a little bit sluggish relative to some of the other markets we're covering. And it could be buyers trading up to reinvest, which we're seeing a lot of activity in the townhouse market around 3 million to 4 million in lots of the brownstone neighborhoods that we track. And it could be first-time buyers coming into the market, maybe getting deals because there could have been some price adjustments on those listings to move the product.
So this time last year, of course, we were heading into the lockdown, and none of us knew what the next 12 months were going to hold. And here we are almost exactly 1 year on. And if we compare this past year in real estate terms to what happened in the 2008 financial crisis, how has the year actually panned out relative to that last cycle?
So this time around, which we're kind of can be described, I think, in one word of a health, two words of a health crisis versus what occurred in 2008, the global financial crisis, as a credit crisis. This cycle so far of which was about 12 months ago, of entering into this current circumstance, is rebounded, I think, much quicker than what has happened in the global financial crisis of confidence coming back to the marketplace, and people actually being able to borrow monies. Debt is fairly readily available. Lenders a little more scrutinous than they've maybe in the past. Interest rates historically low, still low, maybe trending up a little bit, maybe pushing people off the sidelines because of that to buy now versus waiting to see where interest rates go. And as far as I'm concerned, it's been a very quick kind of turnaround. It was quite silent there for a few months, starting March of last year, April, May, June, and then kind of tepid activity on the buy side coming back to the marketplace. And again, the townhouse markets that we cover and we are actively participating in with our buyers and sellers. As every week goes by here, more and more participants are out in the marketplace looking, doing deals, making offers. So it's really been impressive that within 12 months, this has turned around and kind of picked up, not exactly where it left off in early 2020, but maybe a few quarters before that, when the desire to live in Brooklyn was quite strong and had been in an upward trend for over a decade.
So let's end on a little fun fact again, as we talk about something that we get asked a lot by many of our clients. And that's the difference between a home inspection and a home appraisal. So one sentence, Donald, your challenge is to explain the difference between those two terms.
I'll see if I can keep it to one sentence. I don't know. I'll start with one sentence and see where we go. So an appraisal is done by a person who's hired by a bank who is going to be lending money on a deal. That appraiser's job is to estimate the current market value of the asset that the borrower is planning on buying, and does that through a comparable market analysis, typically of looking at closed sales of other similar properties in the marketplace. That's an independent exercise that is disconnected from the bank, and it's always part of the mortgage process or mortgage contingency in a deal. The inspection of a home is done by somebody completely different, who's hired typically by the buyer. And our custom here in New York City is to usually do that inspection prior to even signing a contract. I know other states that process is carried out within the contract period. Deals are typically renegotiated based on that assessment by that inspector. Here it's done in advance as to kind of cut to the chase and remove any kind of issues or bring issues onto the table prior to that, should it be impactful to the sale price. So two distinctly different undertakings, both quite necessary and present here in our marketplace, just about on every deal.
I think that was very clear. And in fact, I believe in your past, Donald, you were an appraiser, weren't you?
Yes, I was. Quite some time. I did commercial appraisal work for about a year and a half. And then worked for a large investment fund where doing appraisal-like work or asset assessments. And then I worked independently with somebody else and did residential appraisals in Manhattan for townhouses, co-ops, and condos for a couple of years on the side while I was starting to build out my current business, which we have now.
Great. Okay, that's it from us this week. Check back in next week for more accurate and informed observations on the Brooklyn property market. And it's goodbye from me.
Have a good week. Chat again next week, Katriona. Bye.